Hello, my name is John Hamilton. I'm the Managing Director of Cross-Border Information and as a contributing editor at our newsletter African Energy. For the past decade and a half, I have also looked after our Egypt coverage. Our chairman John Marks, also a long-time Egypt watcher, and myself will be holding an online discussion about the opportunities in Egypt's electric power market on the 20th of May. I hope you'll join us. The main question we will be talking about is whether Egypt has too much power, and if so, what are the prospects for further renewables IPPs going ahead in the near future? The past 6 years of energetic procurement means the sector has a huge built-in reserve margin. An enormous amount of new gas-fired capacity has been added, nearly overshadowing one of the most ambitious wind and solar programs on the continent. Local industry participants worry that recent solar PPAs have almost been too cheap, to the extent that they threaten the competitiveness of existing state-owned and subsidised gas-fired plants. Are the authorities now going slow on new agreements? Maybe. Although, with financing now agreed for Aqua's 200 megawatt Komombo PV project and Amea's 500 megawatt plant following on soon after that, there's still a lot in the pipeline. Looking beyond this, we still need to know exactly when Aqua's planned gas plant at Luxor and Rosatom's 4.8 gigawatt nuclear plant on the Mediterranean will be built. A lot of expectation has also built up around the prospect that some older and woefully inefficient gas plants could be shut down early. Decisions are pending, and to give it credit, the government has not shirked from pragmatically adapting its plans as needed in the past. Also, the political leadership has not forgotten the 2012 blackouts and expects that demand from the growing population and economy will soak up excess supply in a few years. We'll see, but other factors are also affecting the anticipated balance of the market. These include natural gas sector's very uncertain dynamics, the potential, perhaps the need, for regional exports via HVDC lines, a new favourite trend across the whole of North Africa, the need for mass desalination capacity to offset expected disruption of water supplies from the River Nile, the expected introduction of regulatory reform to allow wheeling throughout the network, which will further open an already interesting commercial and industrial opportunity. It's also important not to forget the government's broader commitment to energy transition and decarbonisation. This is real. So the combination of these things suggests Egypt's market still offers opportunities to well-placed investors and developers with a good understanding of the political risks. John Marks and I will be discussing these subjects and more at our online discussion on Egypt here at African Energy at 11 a.m. on Thursday the 20th of May. Please register to join us by clicking on the link on our website.